Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, my voice is back. It's better. Hey, I'm a little bit late because my wife had to take the daughter to girls' camp, and I'm holding the baby. You see the baby? Oh, the microphone's in the way. Hello, baby. So we're just going to chill here until the wife comes back. Actually, no, we're not just going to chill. We're going to look at the charts. Let's look at the charts. Where's my charts? Oh, I closed them. That's right. Oh, hold on a second. His dog is eating my foot. I got a dog in here too. He won't go to his spot. You see, I have a spot right there. That chair. He's not going to the stupid chair. Yes. I'm going to switch workspaces to our older workspace. For some reason, that dog likes that iron light. Goku, no. Do not chew the wires. Dangerous. Okay, here we go. Okay. So, what am I looking at here? Copper's still not looking so hot. Well, let's start over here. Treasuries moving down overnight. I think the most dominant factor we're going to have here the next few days is going to be end of month rebalancing. So, I don't know the way that goes here in the treasuries, but for now it's been going down the other way. Equities, though, there is a lot of money apparently that needs to come into the market, so we could expect a continued rally going into, let's see here, I think it goes even till Thursday, right? Yeah, well, Windows is not really cooperating here at the moment. It's because Ninja Trader's still loading some stuff. Oil bouncing a little bit. Okay, that's good for the economy. I mean, it's bad, but it's means that they are seeing some economic growth, maybe. Gold and silver. Well, silver popping back up. That makes a little bit more sense, but gold and silver kind of in doldrums. And we already looked at copper. And then we look at the Bitcoins. Bitcoin's getting a bit of a bounce, pointed down at the moment, but, still higher than they were a few days ago. And the dollar taking a bit of a plunge down to 103.6. Interesting. All right, let's move some things around here. All right, so how are you guys doing? Let's get some water here. The question is, will my voice continue to improve or will it get worse? Find out next time. No. Anyways. I really need to figure out what chart it is on this. Well, so we kind of did a little bit of work the other day. Like, okay, let's slim this workspace down a little bit. And yeah. Slim the workspace down a little bit, and that worked. But then it's like, okay, so what components are the most expensive, right? Just noticing the spreads appear to be flattening again today. One thing is this oil chart I have tick replay on. I don't need that on that chart. Tick replay is awfully expensive, so we will forego that. Okay. Close workspace 4. Clean things up. Oh, make sure that we got our news squawk going. Struggling crypto broker Voyager reveals that it maxed out the credit line it got from Sam Bankman-Fried's Armada firm 5 days ago. Oi. This Sam guy, I'm surprised that he's doing all of this. Because the money's not there. Right? Somebody has to pay. Somebody has to pay, man. And by bailing everybody else like that, it just kind of makes it more likely that you're going to be the one that will pay, right? Like, it's one thing in a housing crisis, there's like real tangible assets there, but in cryptocurrency, there's nothing there, right? Bloomberg tweets, fund managers who buy cheap out of the favor stocks are finally getting a chance to own shares of Meta platforms. Have fun with that. Goldman, current crypto level assets and trading volumes imply further degradation and Coinbase revenue base, which we see falling 61% year over year in 2022 and 73% in the back half of the year. Despite recently asked, we believe further cuts are needed. Well, I tell you what, every time that I get on LinkedIn, it tells me, hey, people are hiring. And one of the people that are hiring here in Utah, at least, Coinbase. I'm like, no. Don't think that's the best place to get into Coinbase right now. And I think I made the right decision, yeah. Stupid spammers. Block. All right. I still see messages from spammers, and I don't know how to get rid of them. Maybe I need Dinobots. It seems like the built-in one's not enough. Dinobot's not enough. Maybe I need to look for other solutions. Alza Dagha joins BrokerTech. Okay. I don't know who that is. Who is that? Alza Dagha joined BrokerTech on the 1st of June as Senior Director of BrokerTech Products. Dagha is based in Singapore and reports to Robert Siddons, Senior Director of U.S. Treasuries, APAC. He is responsible for U.S. Treasury's client relationship management, sales, and onboarding on BrokerTech's hybrid platform in the off-the-run U.S. Treasury instruments. What about the on-the-run? Do they not have on-the-run instruments? Dagha joins BrokerTech from Kotex Partners, where he was Senior Director for Asia Rates. Prior to that, he held a variety of front office, fixed income, and FX positions at BNP Paribas, Westbank Institutional Bank, Lloyds Banking Group, and HSBC Investment Bank. Interesting. Well, I don't know if there's any way that we can use any of that information, but if there's something going on in the fixed income world, we want to know it, right? And Dan Barnes of the Bond Desk does tweet out some stuff from time to time. Excuse me. Let's see if we missed anything interesting on Twitter overnight. Oh, what's this? My fight with Snowded. I don't know who that is. Resolved in a nice conversation in Paris. He insists that he is Welsh, not English, and let every single French person understand the gravity of the confusion. Not related to Snowden. I don't know who that guy is. They look happy though. Singapore warns of brutal and unrelentingly hard crypto regulations. Yep. Stephen Dale says the running out of jurisdictions where regulators are going to turn a blind eye to these predatory financial schemes. Amen. Anthony, and this is where I came in yesterday. There's no cutting the corners in trading. You learn by doing it. You can learn someone else's strategy that has 90% win rate and you can still lose money. It's about your execution, position sizing, and confidence in your strategy, not the win rate in someone else's strategy. Well, I think that the reason that tends to happen is because the strategies aren't as profitable as the people promoting them claim that they are. They don't understand the fat-tailed nature of their strategy. Is more likely than not what happens. But I was thinking about this yesterday. I think there are 4 major reasons why retail traders fail. First one is the easiest to tackle because it's completely up to you, and that's time. How much time do you have to put into this? How many years are you going to work at it until you have success? And if you've only been doing it for 5 years, that's probably not long enough. I've only been doing it for 5 years. I think that that's not long enough. It takes a really long time, right? Then the next one is the psychology. I only address that 1 second because it's like we have a lot of resources about the psychology, but it's also the hardest to overcome, right? Because that's like a personal thing. The other 2 are the risk management and correct understanding of the markets. So if you watch my videos, I'm trying to help you get in line with a correct understanding of the markets. That's the one that I think that most people get wrong, is that they have these ideas about the markets that are just incorrect, that harm their trading. But then there's understanding the risk. And the thing that people always miss with the risk is that markets are fat-tailed, which means that you can have a move that, your average loser is like 4 points on the S&P 500 or your average rotation. But then there are rotations out there that are like 200 points, right? Literally hundreds of times that average rotation. So that one rotation, if you catch it, is worth hundreds of these other ones, right? People don't factor that into their strategies. It's kind of the human brain is not designed to think that way. Human brain is designed to make simple predictions to help in hunting. That's why you get that sort of thing. 90% win rate, yeah, but what's the kurtosis in their daily returns? Well, I still get these odd gaps in my dollar index thing. I don't know what you do about that, but I think that it is doing the correct thing. It may just be an aberration that kind of can tend to happen. Because if it ticked like right at that moment, it could take more than one tick because all of the instruments move or something. Wait, what? Nah, not gonna touch that story. Not unless you guys bring it up. Nope. Well, here in the treasuries, I'm not 100% certain which way we go. I suppose I'm probably leaning towards long rates. But they're retracing back here quite aggressively. And we may be having another one of those situations where the initial move is then retraced and they go the rest of the way for the rest of the day. That has been happening as of recent memory, hasn't it? Don't have a super clear. I mean, I think that the next few days we should have opportunities in the treasuries, but I don't know which way it is. I don't know which way it is the problem. I hate that my voice is like this. I hope it's not like this tomorrow. It must sound so annoying to you guys. Looking through all my things, I got a little bit of reorganizing to do on my priorities, I think. I've made most of the videos that I really wanted to do. So now I kind of have like a new set of videos that I want to do, but I don't think I quite have it all organized out right yet. Do you do no, don't do this full time. So I have to say, well, there's a couple of takes on this. First of all, it's extremely difficult to make a full-time living from trading. So if you were to look at 1% return per day, which is a realistic return. Okay, a lot of these people are posting like 1% return per trade, and they're pulling like 5% returns many days, and they have like 20 to 50% drawdowns. Right? That's not very sustainable as a living, is it? But if you do 1% per day, you could live off of that. But how much would you need to have to make $100,000 a day? right? Or sorry, not $100,000 a day. Actually, if we were to take it, let's do a little bit of math here. So 1, 2, 3, 4. Let's see, there's 25 trading days in a month. Let's say you want to make $5,000 a month. Oops. That means you need at least $20,000. Right? You want to make $200 a day. You want to make $200, you need at least 20K. Okay. So if you had at least 20K, maybe. But most people don't even hit that 1% risk per day. Okay. So I'm being a little ADHD. First point is it's really hard to make a living from doing that. Second thing is that what I do is very, very mentally taxing. And I would not recommend doing it for more than 4 hours consecutively. Okay. So it's not a full-time gig. It's just not. It's a 2 to 4 hours in the morning and then do other side job stuff. Right. So I could probably live off of trading and the YouTube channel. If my YouTube channel continues growing, I think it's feasible in the future that I will make a full-time living off of it. I could take the risk and start doing YouTube full-time and making videos every day, and I probably would get there, I think, but I'm just not a risk that I'm willing to make because I have a family, because I think I can just continue to bootstrap it. The channel's been doing really well. But the other thing, faith, focus, and finance, is that I suspect the reason that you say that is because you sit and you think, okay, if I want to make a living from day trading, what I need to do is I need to go and find somebody that is making a living from day trading and then just follow them. I wish it worked that way. I really wish it did. But the reality of the markets is that the markets are very competitive. So anybody that's out there sharing publicly what they do, that thing that they're doing is unlikely to remain profitable. We'll get arbitraged away as other people start to trade it. So you don't want to try and follow somebody else. What you want to do is find information that you can prove that's empirical. You can look at the stats and you can make your own trading strategies from that. So the trick here is don't find somebody else's strategy. Learn how to make a strategy. And that's what I do on my YouTube channel here. So if you go to my YouTube channel, I have videos that teach you correct understanding of markets, including very deep market microstructure stuff that you're not going to find anywhere else. There's a lot of videos about developing your own strategies, whether it's from an algorithmic or discretionary point of view. And then you come here on the live stream and you get to learn about what's going on right now, because the market is more statistically efficient than it is informationally efficient. So the informational content, that is like the news and that sort of a thing, is very, very important. And that's why visiting the stream every day can be really beneficial to help you getting started. Don't watch the stream because you think that I'm profitable and that by copying my methods that you'll be profitable. No, you come to this stream because it's like a collaboration. You learn what's going on in the markets and what kinds of things to pay attention to by interacting with people here on this channel, right? And I think that the reality of it is that most of the people that come in here and stick with it probably get, well, not most of the, I shouldn't say most of the people. That's definitely incorrect. I'm sure that our overall stats are probably very much like the rest of the industry, which is most people fail. But there are definitely a lot of people here that are way more successful than myself. So I'm not necessarily the primary draw on the stream. What's up with so much out of the money put options in SPY? Well, there is definitely some people looking for a move lower, isn't there? That's I think part of why I think you're going to continue to see a kind of like a bubble up move in the S&P 500. So what do we got? We're at the top of the hour. I'll try here. I mean, and I'll take a sim trade in the micro ES. Since I feel like I have a much better handle on what the S&P 500 might do today compared to the Treasury. 3920 is a pretty even number, so I'll take it long there. I don't know necessarily like what are some of the different strategies and markets that you've traded? Oh man, I've tried just about everything, dude. I've done a lot of things on charts. I think the one that I had before all of this, the one that I had the most success with was multi-time frame confluences. But I think that was mostly a factor of the market. You know, it was during that that deep pandemic time, and I kind of knew the things that I know now. It was just like I didn't understand them on the same level, and I didn't have the same kind of I don't know, fortitude with it. I was still trying all of these different things, technical analysis strategies, right? So like the thing is I'm a programmer by trade. By day, I am a site reliability engineer, which is like you have to combine knowledge of infrastructure stuff and monitoring and programming and apply that to monitoring and alerting is basically what we do. So I'm a programmer. I'm quite good at it at this point, I feel. And I just did like indicator soup, right? Okay, here's a moving average. And I also did a lot with like price action kinds of things. So I wouldn't call it price action. I think one of the videos that I'm going to make next is why price action sucks. But and one of the primary things I hate about price action is that it's not really actually like a well-defined thing. It really ends up being a marketing term for people to put any kind of strategy that they want underneath of it. And they're just avoiding calling it technical analysis, but it really is ultimately technical analysis. In fact, many of the price action strategies out there are more pure technical analysis than the actual strategies calling themselves technical analysis. But I digress. I did a lot of strategies that were based on like higher high, higher low kind of setup in certain situations. Or the one that I found worked the best was like a double bottom. You got a double bottom on a zigzag or pivot chart. Then you take it long, yada yada yada, and then here's like filters of when you take it and everything. And what I found was it didn't work. Actually, what I found every time that I found something that seemed to have technical significance, what I found was that price was more likely to rotate around that price than it was for that price to become like a turning point. So in terms of technical analysis, I'm telling you what, I backtested just about every kind of little thing that you could. And you know what? I understand why people might think that stuff works, because you will find time periods where it does. You'll find like a 3-month, 6-month time period where it works really, really well. And then it will like crash and burn. Because what will happen is like certain large player might become prominent in the market. Market starts following them. They're using these certain things. And then big risk event comes. Market moves against them. And then the strategy never works again. So then I started to focus more on the news, and I found that focusing on the news helped a lot. If only because I knew what was going on, I guess you could say. You know, like if it worked or didn't work, I could kind of sort out why. Oh, okay, it didn't move the direction that I thought it was. Why or why not? Well, maybe that piece of news wasn't that important. I didn't understand the positioning, these sorts of things, right? And then we learned a lot more about market microstructure. And I kind of came to the correct understanding that we have now, which is that markets are very statistically efficient, but not very informationally efficient. And that ultimately what we're trying to do is predict orders. And what are things that are, what are things that are predictive of future orders? Well, I'll give you one really important one right now is that index funds and non-discretionary funds make decisions and have to rebalance based on how much money they made or lost on their investments and how much money comes in the form of new distributions or whatever. People making new contributions, sorry, not distributions, but the combination of their distributions and new contributions, right? They have to put money to work. And the quantitative models on this suggest that there is some $30 billion, I think, that have to come into the market in the next 4 days. So that's why I'm long ES. And I'm taking it at specific times. or I kind of have a way of timing it that is based on like when the last move was and how long has it been. So generally I wait 45 minutes since the last major move. But I like to make moves around between 7 and 7:30 because that's when some people come into the market. So if we're expecting some buying, I'm expecting them to come in a little bit in the next 15 minutes before the open. Right? Should have taken that with 2 contracts so that I could like well, if it comes back, I'll take another one. How about that? 2 contracts and then take one off at 30. Because I do want to hold it all day. There is a good chance that they will retrace back against me. So if I can limit them moving against me, that would be good. What are we doing here in the 5-year? What the heck? Okay, there's no reason that the top offer in the 5-year should be 3.346. Like what? That's ridiculous. We're going to do something about that. We're going to do something about that. I'm willing to go at least 325. Maybe 30. Maybe 30. No. Maybe 33. The bid is all the way down at 3.215. So we'll go to 315. Will it let me? 315. There you go. It's like literally a 100 tick spread in ZF. This is so ridiculous. Here comes the daily spammers. I wonder how long it's going to take YouTube to do something about that. The robot's not moving. I don't know. Reggie Williams, good morning. Isn't that the name of a basketball player? Maybe, but it's not me. I'm white. I don't know if they were. Let's see. Let's search YouTube. Yep. He's an American basketball player. He's old now. I've never taken the John Grady webinar. I've seen a portion of it. Somebody sent me a short recording that they did. I did start with his basic course. I think his basic course is well worth the money. Basic course is great. Basic course is great. You know, his webinar, that's a lot of money. It's a lot of money, and you just got to consider if, you know, that's money that you're willing to spend, because there's no guarantee that you're going to make that back from trading. Most people will still fail. Oh, good. The basic course is good. So here's how I would present it, Reggie. If I know what orders are going to come in, I can tell you exactly what's going to happen. The No BS course doesn't necessarily teach this stuff, but I have a video about it, so you can learn it that way. But what the John Grady's basic course does is it tells you the game that's going on here on the base level, which is useful. I think nobody else teaches that. Nobody else explains that. So I think that that's very valuable. But in the end, you still have to know like what the orders are going to be in the future. Okay. So think of what John Grady's teaching is more like technicals and the execution and getting started, right? But you're still going to want to go out on your own and find things that are predictive of future orders, like end of month rebalancing, certain reactions to news, certain correlations, etc., etc. Basic course is really great though. Well, ES does continue to move up here. Can I ask a technical question? In fast markets, I get strange price differences between CL and MCL. The prices in CL lag about a minute on the real prices. Oh, that doesn't sound right at all. Do you know what your who is your data provider? Is it live data? Or is it sim data? That sounds like a sort of thing that might happen to you on sim data, but not on live data. But if it is, okay, so it's on NinjaTrader Continuum. That's weird. That's really weird. I don't know what to tell you. Oh, so, you know, I didn't even have MCL on here. Let's just a second. Well, yeah, mine are right about in line with each other. I can see the real rise in the order, but not in the graph. That's really weird. Well, the first thing that I would maybe do in a situation like that is check your, like, rebuild your workspace, right? Rebuild your workspace, possibly clear your cache. So, like, you can come in here to your control center and go tools, database management. And then there's things like update instrument lists, reset DB, repair DB, these sorts of things. On top of all of that, make sure that they're the same expiry. So it could be that you have one is like on, what would it be? Is it 08? Right now? Maybe you have one on 08 and the other one you have on 10. NT data is were, well, I don't think that it's as good as what I got with Rhythmic, but yes, quite a bit of a pullback there. You try to reset and a new workspace. You could also try reinstalling NinjaTrader, but it sounds like a question for your broker. Okay, I want to purchase Jigsaw through your affiliate link, but I doubt between independent and professional. By the way, I've been having a couple of people complain that they can't get that the affiliate link isn't working for them, like that it says expired. But then somebody bought with the coupon on Friday after we had that whole discussion. So I don't know, maybe they fix it. But I recommend the independent. I'm familiar with what's in the advanced education courses, and it's not like it's not good information. It's really good information. It's just there's a lot of information in there that is available elsewhere, or you'll figure out on your own. So, like, yeah, you're saving yourself time. You buy that advanced program, but you know the problem is for most people when we're starting out, that's money out of what you would put into your account, right? And I would recommend putting that money in your account because you're going to need it to pay for data fees, right? That's like a year's worth of data fees. So I would do that first. If you have tons of money to burn, you know, if you have $50,000 to burn here or whatever, then go for it. But the vast majority of people get the independent and are happy with it. So yeah, a clean install. But the problem that you're having, it really sounds like it must be deeper than that. So I kind of wonder if not, I don't know, you're going to have to talk to your broker. That sounds like a really weird problem. But it also sounds like the kind of problem that when you find out what it is, you can be like, oh, duh. Like I said, maybe they're not the same expiry. Yeah. Well, the Dr. Moo Moo, the only difference between the different packages on Jigsaw is the education that you get with it. And the value is in the tool and executing with the tool. Well, Treasury's stepped up to the highs there. I earlier I said, well, I don't know what's going to go on with the treasuries, but they've done a lot of make a push lower and then sweep up higher and trend all day. So far, they did sweep all the way back across that range. In Journalytics, this works through the NinjaTrader 8 bridge, and the best thing is to go via Rhythmic for data, right? I think that Rhythmic data works better, yeah. Because not only do you get level 2 at all the prices, but you don't have to go through the bridge if you use Rhythmic. If you use Rhythmic, you can connect them both to our Trader Pro. And then you can use all of the advanced features on Jigsaw. Kind of depends on what you want to do in NinjaTrader. Because if you go with Rhythmic, we kind of do a little bit of a hack to be able to use Rhythmic data in NinjaTrader. And that hack won't allow you to execute through NinjaTrader. Essentially, you basically have to run it as a demo. So if you're really dead set on the advanced features of NinjaTrader, you have a full NinjaTrader license and you want to make use of that, then you don't want to go with Rhythmic data. But then you have to trade on NinjaTrader brokerage and you're using Kinetic, whether you want to or not, right? Mm-hmm. Yeah. Well, in all honesty, Jigsaw is not necessarily the way that you want to go if you're trying to be the cheapest that you can, right? Because to execute live trades, it's a $50 a month license for Jigsaw, right? Now, most platforms have a monthly fee. Sierra Charts has I think it's $30 if you want to use their advanced features. So that's still a difference of $20, right? Or broker then by Jigsaw. If you're only using Jigsaw, the majority of people are using AMP. I also really like EdgeClear. That's that's the brokerage that Futures Trader 71 is associated with. They left Stage 51 and they're now with EdgeClear. But we're like, really, you can pick anyone. It's very hard for brokers to differentiate themselves, you know? Well, we're getting quite a bit of inversion here. At least inversion between... not quite. Let's see. Right now, my what I'm pricing as the offer for the 5 years is way above. It is probably lower. Like it probably could go to there. I don't know how close I'd have to bring the spread. We could try bringing the spread all the way in. 324. I don't know. Let's just try it. Yeah, they're basically a third-party introducer. It really is. Yeah. I mean, the main thing that matters to you that you get with your broker is your individual support when things go wrong. So, from that perspective, I would go with the broker that you like, that you can develop a personal relationship with. Because especially if you become profitable, you're going to become a valuable person to them, right? You want to be able to negotiate better commissions and all these sorts of things with them. You did the silver jacket? How much is that one? That one's like a few $100s, right? Okay, so Lithuania has been experiencing cyber attacks, and a Russian hacker group has State-sponsored Russian hacker group has claimed responsibility. So that's one we keep on our minds here. File for later. You're in the EU. I don't know. There might be some futures brokers that speak Dutch. I don't know. Just remember, from the perspective that you're taking, you know what data you want, you know what platform you want, you can pick from any of the brokers that offer those things, you know? And yeah, they're going to have different commissions, so you can just go with the cheapest. If you're just going to go with the cheapest, you're going to end up at AMP, okay? Yeah, my grandma's Dutch, so I've got some Dutch in me. I'm really hating that my voice is still not coming back. I thought that by this point it'd clear up, but nope. AMP is iffy on support. Yeah, I've had some experiences with AMP that were really good, and I've had some experiences with AMP that were like, what the hell are you guys doing over there? Yeah, you're using AMP? Yeah, I got to tell you, AMP is far and away the most popular. It really is. AMP and NinjaTrader. And CR charts, I guess, but like the issue with CR charts is it's becoming less. What is the word? CR charts is becoming less independent. You're basically using their data now and all these other things. And I think that eventually they're going to become their own broker too. So then it'll be just like NinjaTrader. I think that the funniest, most ironic thing that would ever happen, because I tell you what, Peter Davies, he doesn't want to become a broker. I'm gonna bet you he doesn't want to become a broker. But the way that the industry is moving, that might just be what, it might just turn into, you basically have to be a broker. You can't just be a data platform, you have to be the platform and the broker. That could happen. Morning, D. You're a little late. S&P 500 breaking average true range stop at the moment. So that doesn't necessarily tell us anything about the future, but it just tells us a little bit something about the degree of comeback that we've had here last 30 minutes or so. There's the baby is awake. Oh yeah, so I was still thinking about faith, focus, and finance, talking about the Norden method. First of all, Norden method has like a yellow jacket course, which I think is great, and it's free. Everybody should take it. Take it seriously. Try and get 100% on it. Right? I got 100% on the yellow jacket course, so I haven't taken the rest of the course. I am familiar with what his materials were before, and my understanding is that what he's got now is the same thing, but just much more expanded. And lots more specific examples and videos. So, I don't know. The full course is pretty expensive, I have to say. Also, you got to realize that what he's doing is a little it's basically like more of an arbitrage strategy. It's kind of like I would term it a discretionary arbitrage market making strategy, based largely on correlations. So, it's hard to find a place where you can compete there. You probably could compete here in the micros using the Norden method if you had access to on-the-run treasury data, right? Then you could arbitrage the micros, right? he has got some knowledge that's very valuable that needs to be passed on between people because the robots basically took it all over. But it's hard to find a spot place to make money from it, you know. So the only point of that is it's not necessarily for everyone, right? A lot of you guys, you know, like you're in Australia or the EU, there might be some instrument that, you know, you need to find another instrument that's very closely correlated with it, right? Like trying to do the 10-year treasury and ES or 10-year treasury and the dollar, probably not enough, right? But like doing ES and micro ES, yeah, that's great. Except for that there's too much activity over there. There's not enough room for you to get that spread. But if it's a new market, you could find it, right? You could find it and make money from it. So it's down to the individual whether that is going to work for you and you know the opportunities that you find. But you have to find the right instrument for it to work. What I do is more speculation. So what you know, you can really pick anything, and it's just a matter of finding an instrument that you can get the information on, right? How is Garlic Coin? I haven't looked at it. I don't want to look at the crypto market right now. I'm sure it's all down. Probably not as down as bad as the rest of the cryptocurrency market, but I'm sure that it's probably getting close to a 1 cent again. What do you think about the gold market? Oh, it's so frustrating, right? I don't know. It seems to me that the short-term supply and demand and so forth in gold is just working against it too much for the bigger play as it being a hedge against inflation to actually work. So I think that it's reasonable to have a small position in gold or silver. There could be a point in the future at which it pops off, right? But yeah, it's a really frustrating trade, isn't it? It's a really frustrating trade. Again, the thing is, you want to predict future orders. So if I cancel my order, will it let me put it back? Okay. But these guys up here aren't going to move their orders, huh? Even though we're all the way down at 215. Literally almost 100 points spread. 100 tick spread. It's possible to show the jigsaw chart like yeah. Well, do you see it in the upper left? That's what that is. Probably need to zoom in a little bit. This range has been somewhat constrained, so you can kind of see it. I to be honest with you, the whole like the colors, I think it looks cool, but I don't really find it that useful. The thing that I find useful is the cumulative delta. Just for some reason, cumulative delta on this chart shows up so well. Shows up so well. But yeah. Oh, that's right. Okay. What's a typical slippage on market orders? Well, so I've traded micro ES before. I traded it for a while until the micro treasuries came out, and I tend to just gravitate towards whatever has the lowest risk. And here's the thing, like your typical slippage, typically most of the time, let's say 80-90% of the time, you're going to get the price you clicked on. Or if you put a stop order on there, you're going to get the price that the stop order was on most of the time. But that 10% of the time that it doesn't, oh man, I've literally caught 40 I've literally caught 10 points. Yes, it was 10 ES points, so 40 ticks. I've literally caught 40 ticks slippage before. That was back during the trade war days. Yeah. So Right? Try factoring that into your expectancy, right? Is there a volume limit set? Is it possible to change because it doesn't show every bubble? Well, so you can adjust. So if I expand it here a little bit, there is like a circle tuner. Yeah, it was literally 40 ticks. It was 10 ES points. Crazy, right? Okay, you can see I have mine turned up pretty high. You can bring it down and it will show a lot more bubbles, right? Okay. But I only like it to show a bubble if it's a really big one. So I put it to 6. Oops. Oops. Sometimes it does these weird things. It takes a little bit. The auction Vista is a little expensive in terms of GPU power. No, little one, stay asleep. There we go. It wasn't during it wasn't during an economic release. And in fact, I don't think that it was like a headline that made it happen, but it was like around a headline. It was like the headline had already happened and the market liquidity was weak. And then I got hit by that. It's kind of weird to think back on. You know, it did this during the pandemic too, right? There'd be these periods or it just would like completely sweep. Nothing would trade during this huge gap. It would happen all the time. Yeah. Kind of when the market gets crazy and the liquidity is strained, you might want to think twice about putting your liquidity out there. Okay, so the initial move in ES is short, and we are seeing a decrease in cumulative delta as well, by about 1,000 or so. Good morning, Claudio. Yeah, I wish you hadn't have reminded me of that time that I caught 10 point slippage, because that was not fun. It brings up bad memories. Okay. So put that back up there. I wish if I had taken the 2 when I should have at the beginning, then I would already be, right? Would already have a lot of breathing room. And now I'll even be reckless here today. If it goes lower, I might even add some, but let's just let it do its thing first. Stay asleep, little one. You got one of these VTECs that has like the video. Oh, I can see him moving around. And now he's comfortable again. I guess the thing that you got to realize is, again, markets have fat tails, right? So if you look at what the fat tail is for slippage, it's fat. 10 points. It's happened to me. Could happen to you. Yeah. Listen, any retail trader that was in the market at that time caught that slippage, right? Because who is a retail trader that you know that has a stop further than 10? At least back then, 10 was big. I know that now 10 is like they move that all the time, but back then that was big. Yeah. Slippage can easily ruin an account. Yeah. On the split side, if you're the right direction, right, you can catch a winner that's easily 100 times your average winner or loser, right? That's why you got to be really careful about, you know, looking at people's past successes and basing all your trading off of that, right? The survival bias will really screw you, because the fat-tailed nature of the markets has a crazy effect on that. You think treasuries break out to a new high? They sure did. Well, and they did, didn't they? When they broke out to the high, they came almost all the way back, and now all the way back up. So here in the treasury today, for me, unless I get lucky here, some idiot hits into 285. That would be great. Probably not going to happen. Aha. Okay. Oh, look, there is somebody moved it. So if I cancel my order now, will he go down to him? Yes, he does. Okay, we fixed it. I mean, I guess we didn't fix it. I think that if I had tried to put a limit order out over here, it probably wouldn't have let me. So it won't let you move it that far from the current best offer. It won't let me place an offer that's like 20 ticks away from the current best offer. Why did you say that trading in the treasury is less risky? Okay, so in the treasury, if you're trading the 10-year and you catch more than a tick of slippage, that's like, oh my gosh, crazy. Right? Something really crazy has got to be going on for you to catch more than 2 ticks slippage, even if the slippage was from using a volume stop order. You know, that's where you say, oh, don't hit unless there's less than 50 contracts on there or something like that. So you're submitting a market order late. You could potentially get 2 tick slippage. Very unlikely. That's $15 over here. But then these ones over here, it's $1. It's $1 a tick on something that is like maybe 10, 20 ticks average range. So to lose more than $20 on an individual trade, it has to be like a once in a lifetime kind of event, or once a year kind of event at least, right? So that's all that's meant by that, is just the volatility of it is less and the tick size of it is less. So the other thing is that the 10-year has the most liquidity inflows. So it's more likely for you to be able to find an alpha in it because of that. That's an empirical result that they found many times. It's counterintuitive, is that the larger an instrument is, the more potential alphas are available in it. And I think that they hypothesize, or rather, that the reason for that is because that means more large institutions trading them that can create those kinds of patterns, right? The treasury is just kind of a sweet spot. for that sort of thing in many respects, right? There's a lot of information out there available, right? If I want to know what's going on in the copper market, I find that information hard to come by. There is some information in the treasury market that we just don't have access to, and I find it really frustrating. But there's also a lot of information in the treasury market about, central bank policy, inflation, et cetera, et cetera. It's very economically sensitive. So, those are all things that you can kind of utilize for your speculation. Right. So there's just a lot of advantages to it for that. Right. Versus ES. ES is a very random instrument, So ES is really good for risk-taking strategies. It's just my experience has been that you need more than just taking on excessive risk to stay profitable in the long term. I'm going to turn this 5-year off now, so don't accidentally click it. Funny thing, I don't know what day it was, but you can go back into my my live stream playlist and find the day that I took that slippage. I mean, it's in there somewhere. I don't know if it was in the title or not, but it's in there somewhere. It's kind of funny when you have 5 years worth of live streams, it all kind of, becomes impossible to search through it unless you know the specific day you're looking for. I guess I could probably go through broker statements and find it. It would take a little bit of work. Treasuries did move higher there. I'm sure feeling like I should have been short at 3.2. Uh-oh, baby crying. Well, he's probably crying because he heard the garage, because that's Mom. Hey, Octavius, how are you doing? So, I'm kind of thinking here in the 10-year. I probably could try going short 17.5. I'm betting you that it's pretty likely that I could at some point catch 16.5 or maybe even 15.5. I don't know how far this is going to go. S&P 500 is looking pretty unhappy here at the moment. I'm not quite debuking, but yes, so far not going so well. I don't know how far the treasury goes here, though. I don't have anything that's going to tell me that the flow is going to continue or how far it's going to continue. So it is probably better for me to stay out, because when I look at the ranges and everything, if I were to get short rates here, the chances of them going at least 10 ticks beyond me is still pretty high. So I don't think that I have enough what is the word, dedication to the trade to take a drawdown like that. But there, I mentioned 17.5. Oh man, they're already gonna get 16.5 already. I mean, they're almost there. That's pretty crazy. Well, what do you think? Should I bail on the ES trade? Should I keep it? Hello, an asset killer. How have you been? See if there's any headline. What Zero Hedge is posting their headlines here now? No. GOP Congresswoman livid after Pelosi elbow checks her daughter at ceremony. Oh man. I was hearing about that, but I didn't watch the video. Was it a long? I have a long in ES, yeah. I have a long in ES, and we're thinking, should we bail? Taking 20 points there, that's not good. Of course, if I had done this the way that I was supposed to, I'd only be coming to break even here, though. So, oh, actually, no, it wouldn't be break even. Break even would be at 39.10. I don't know. So there, you did get 6.5. Did you get 1.55? Yeah, it's a sim trade in ES. I tried ES for a long time, guys. When the micros came out, and I think that the kind of thing that I'm trying to do doesn't work very well in ES. Live action says maybe add to it. I know, right? That's kind of what I'm feeling at the moment. It's a sim trade. Let's just add to it. It's a sim trade. Let's just add a contract at 39. Add 2 contracts at 3,900. They'll probably blow right through it. Hey, how's it going? Leandro Matias. Apple has been rejected by the U.S. Supreme Court in Qualcomm patent challenge. It's one towards the open that I missed. Trading ES is bad for your heart, right? The problem is that, again, there's just a lot of randomness to it. Well, one contract did trade at 3.155, so I guess I could have taken that trade. Just off of the continuation and the feeling for it. But, you know, that might have just been luck. It is coming back here pretty good. Yes, kind of shying away from the 3,900 for the moment. There you go. It seems like there is some support at 3,900, but like, again, when you get something like that, it tends to cause it to rotate around that price. So, they blew through it for now. Let's just kind of watch, but what you might see the ES form of liquidity hole here. The liquidity holes are a little bit harder to spot in ES because it happens over such a wide range, but we are getting a clear point here in ES at a very round number. So let's watch, see what they do. Oh man, they're coming down again in the treasury. Or I shouldn't say in the treasury, I should say they're coming down in the yield. Coming down in the yield as the treasuries push up new highs. Note though that they were at like 118 on Friday, right? So they could move. Who knows how far they're going to move? So when it starts moving like this, I get awfully tempted to get in. See, I think what they're doing is they're saying, bear market's back on. Last week we just had a bull trap. Now we're gonna sell it again. I'm not so sure it's that simple, but I think that the treasuries are reacting to ES. So that doesn't necessarily give me a good prediction of order flow here, does it? Only that the order flow has been very consistently long. Maybe if we got a really strong pullback. Okay, now he's great. Okay, so we're getting some news here on the Federal Reserve. Didn't quite hear it. I heard it just as I was sitting down. Pending home sales coming. Had something to do with a May data. Oh, maybe he was just reiterating the pending home sales numbers. Must have been what it was. Well, let's see here. Pending home sales change month over month, expected negative 3.85. The previous month, negative 3.9. Sure. Some people on LinkedIn, people that I'm like, why do you want me? Why do you want to add me? Don't know you. You're not interested in any of the things that I'm interested in. This guy just wants to sell me real estate probably, but fine, why not? Oh, okay. Okay. Oh, dude. Okay, I got it. So there's this guy, Charles Albert Lahal, who is he's a global head of quantitative research and development at Abu Dhabi Investment Authority. He also holds a prestigious position at a university. I can't recall where it was. I asked him about a study I had found it like 2 years before it like actually got published. So I was asking like what was the difference and everything. And so he wrote this long post about how that works. Should we read it? Let's just read it. Following a comment by Seth Ellis on one of my recent posts sharing a just published paper on LinkedIn, let me share my viewpoint on sharing academic knowledge on the web. When I end a piece of research, especially with students or academic co-authors, I tend to publish the first readable version on one of the common public preprint servers. I generally use ARXIV or SSRN or sometimes both. ARXIV is good to ensure that hard scientists, i.e. mathematicians and physicists, will see it, and SSRN for soft scientists, economists, and financial economists. The machine learning community is a little bit different. They focus on conferences more than on journal, and very often the proceedings of those conferences are fully open. A few words on the nature of publications. Each community, i.e. academic field, has its practices and habits that corresponds to the nature of the way their type of knowledge is built and their type of truth is double-checked. My understanding, to focus on a few of the communities that I know, physicists are proposing theories on facts, hence they have two types of publications: letters that are describing observations of the world. Letters are usually short and descriptive and should be quick and easy to publish. Articles that are proposing a model to explain the collection of the facts. For the second kind of paper, the referee focus on the soundness of the theory, and if possible, the proposed model has to have some explanatory beyond one fact, one model that is not very compatible with Popper's view. Mathematicians focus on the mechanics of the proofs because mathematicians are exploring the possible worlds. Their journal wants new and technically difficult proofs, typically unlocking a difficulty by an innovative mechanism of proof. They are not that focused on examples of applications, and typically their articles do not have a quote-unquote conclusion. Statisticians and econometricians usually accept in their journals less technical proofs, but want the paper to support the idea that the proposed mechanisms by examples involving data. Usually a good article for this community is, here's a real-life problem that standard statistics does not answer well, and this is a new way to understand some of the underlying mechanisms. Economists want that the paper has already been shared within the community, for instance during a conference, before it is published. The acknowledgments paragraph of the paper is usually long and discloses the conferences the preprint has been presented at. During their conferences, the presenter usually shares the floor with a discussant that is indeed a lay version of a referee. My understanding is that they are looking for models in a non-stationary and very difficult to reproduce environment, hence the confrontation of opinions is very important. Sometimes, financial economists' conferences look like courts to me. Someone presents a case that is disputed by others. It is the confrontations of these ideas that produce the paper. That is somehow a consensus of the current thinkers about a specific problem. They want to keep the paper as simple as possible and have a rule, one paper, one idea. A very interesting case of the community of machine learning, knowing it for 30 years now, I witnessed the way their publications went from a mathematical angle, please provide proofs that the mechanisms are correct, to a statistical angle, here's an interesting kind of problem, and a way to extract stable information from it. This angle helped to design subfields, imagery, NLP, reinforcement learning, that is the machine learning way to say control, etc. And now it seems they are favoring more of an angle that is one of the physicists' short witness papers like letters announcing we succeed to use this tool on this specific problem, and very few papers proposing models. This is quite tricky, especially for someone like me, who, because I try to answer a practical problems I encounter in my non-academic life, and then either I would like to share an abstract version of the way I looked at the problem to have feedback of an academic community. Either I want to push academics to work in the same direction because I have sentiment that it will be an important and useful problem for the real world. Next time I will face another problem of this kind, I would prefer that smart academics already brave the road to solve it, and not me trying to develop the model needed to answer it. Wow, this is good shit. I use my understanding of the 4 previous communities, mathematics, physics, financial economics, machine learning, to find an adequate journal. I also present it at some conferences to have early feedback and or advertise that I think this family of problems will grow in importance, and I try to increase academics' awareness about these problems. Think about what I did around the issue of liquidity on financial markets starting a little bit before the global financial crisis. Good, cool. Where are we at? Let's just take a quick look here. ES is still about where it was. They did have a little bit of a pullback. Gonna get the news here in a few seconds. Let's see here. Ooh. 0.7 for core durable goods. And U.S. pending home sales 0.7 versus an expected negative 3.85. So, oh, that's not right. Okay. See if they move here. We have an interesting setup. They are making a pretty strong push to the long side in the treasuries. We just got a piece of news that is a much stronger pending home sales change than expected. We were expecting negative 3.85%, and it actually ended up being positive at 0.7. Same with U.S. core durable goods. They were expecting 0.3, and we got 0.7. So that could change things around. I'm not seeing too much reaction to it as of yet, but I did see an opportunity to pick someone off, so I took it. To see if the treasuries continue to fall down here. We are getting a decent amount of volume selling, though I should note that the 10-year has been selling for quite some time here. Through the top here, it was selling that whole time. Very curious. So the could be in a situation where the buy doesn't care, right? And it's being pretty non-committal here. That's not necessarily what I would like to see, but you know, the liquidity could give way here. We'll just see. No, I don't know. That was some pretty big beats on the news, though. There you go. See, that was what I was kind of wondering, was if the bids would just give, and there they did. Quite quickly, I might add, and the S&P 500 is starting to turn up as well. liquidity in the 10-year is getting a little bit better now, is a little bit better today than it's been. I mean, there I can see some 1500s up on there at least. So some hope that maybe the liquidity will stabilize this week. Well, they're still able to tick back up fairly easily too, so hmm. See, I'm sensing a little bit of reluctance for them to sell it here. I would have thought more would be hitting it at 0.25. Hmm. Okay. So that time the bid broke because the other instruments went down. But it only took like 140 contracts for the 10-year to tick down, and they were like a little reluctant to take it. So I'm kind of detecting maybe a little bit of flattening coming in to the market here. So the spreads may just be trying to work it out before they make their bigger moves. As spreading flattening here is not ideal for me, but that's okay. So we're kind of getting into a low volume node in the profile now. Maybe they get sucked back to the 117. That'd be nice. Okay, so we just saw a large order show up at 01. They do seem a little scared of it. I think I would be I'm very suspicious of that order. It looks like it's gone now, but it was 2000. S&P 500 did a pretty good bull run there, but they are pulling back now. Okay. See if they take the 01 now that order's gone. No, well, nobody's hitting it. Are we actually getting a little bit of steepening? Maybe. The 30-year is down 2 ticks there. If you hitting into 01. Kind of feel that if they trade through 01, that there could be quite a bit more downside to come, but they're being really shy about it. So yeah. Yeah, it was kind of weird that both of them came in at spot 7, wasn't it? When I saw that, I was like, am I reading that right? Hmm. Okay, so a lot is trading at 01 now as they broke it. Okay, somebody did hit me. So I might regret only taking 10 ticks there, but the problem that I'm having here is that I'm like, okay, that's a good point. I think we had a good setup. Like it was both structurally sound and data sound, right? So we got data that the market was really wrong about the pending home sales. It ended up being a positive. I think that's something that very strongly suggests higher rates. And then on top of that, we had just had a strong move up. So you had a very strong opportunity for the liquidity below us to be weak. And we did see that the liquidity below us was weak, but the market orders is just not there. It's just very weak. So it could come through, but at the moment, my feeling is that I got lucky. My feeling is that I got lucky on that. I think that I had good setup and everything. I'm just not seeing the market selling that I wanted to see. So to be at plus 10, one step I think is safe to take. You know, I could have tried to take oh, maybe I could be taking the 18. I think I'd still be wanting to get out here though. So we'll see. It could end up though, it could end up just being like a really slow creeper, right? And that like later on this does go and even make it down to lows. It just takes a while for it to break down, you know? That could be the case. So that's weird. I just heard a noise. I don't know. Oh, it was on LinkedIn. Hmm. Okay. The added value of a journal is its reviewer process and the outcome of the back and forth process with the referees and the editor. I consider that it belongs to the journal, hence, except if we speak about errors that they help to correct. I try not to update the open source version of the paper, so that if you want the version they somehow contributed to improve, you have to get the one hosted on the publisher website and hence have to pay. Gotcha. I've been managing editor of MML. I forget what that one is. That's machine learning, right? Market microstructure and liquidity. Da, 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 da. I know it is a lot of work by the editor and the referee who are supported by the publisher to be sustainable, and this work has to be paid. Of course, nowadays the only journal is paid and not the editors and referees. This can be considered as unfair, especially if the publisher is not spending efforts for the journal. They are not all really supporting the journal. Some of them are very passive. I agree. But if the academic field related to the journal is well organized, the editor and referee should be paid in symbolic awards, better position at the university, and maybe more valuable responsibilities in research projects and better salary. Good deal. Once the paper is published, for me, it does not make a big difference if the paper is published or not, especially if the review process has been very quick because it means nothing needed to be changed in the preprint. What I like the most is when editors and referees come back with challenging remarks and substantially change the paper. I'm in favor of open science since if the dialogue with the editor and referees led to correcting errors or substantially changing elements of the paper. And because they are not paid by the journal, I consider these corrections are part of the academic field, and I put them back to preprint. To conclude, should you find an open source version of all my papers, but it is a preprint, it has been printed before the publishing process took place. If you want the ultimate version, please buy it. If you want to understand the main takeaway and reason, you can stick to the preprint. Gotcha. Good deal. Yeah. I want to respond back to him. I'm going to respond because I like it. Because it's such a good post. I really appreciate him taking the time to make that response. What I saw was all indices coming into a key area simultaneously off thin volume before the economic reports. Also saw lots of hundreds flashing at the inside bit trying to get filled. They looked like selling in reality was getting eaten up, yeah. Well, you can see it here in the treasury. Like, look, it's still moving down. If I was a little bit more patient, I probably would have gotten, I don't have it up here. Hold on a second. So I don't recall where I got out at. Build 176. Oh, really? So even though it went a little bit further, I wouldn't have necessarily gotten paid. That was a good trade overall. I think I'm really proud of myself when I make a trade like that, because the thing that tends to screw me up more often than not is me getting into a trade and seeing that it's not really going my way, like that the flow is not really doing what I want to, and just hanging on, and then getting mad when I have to break even or take a loss on it, right? So for me to understand that the order flow was not seemingly in my favor is, I think, a really good call. I could have made another 5 ticks, but that's, is that really worth the risk? I don't think so. I do kind of wonder what's going on here. Is there a chance that it's going to push down stronger? Well, this whole behavior here kind of has me thinking that whoever it is that's buying must be a non-fundamental player, and that they apparently have more to get out. So I don't know. Yeah, it was a good trade. I would have added an extra lot. You don't have to hold size offside. Yeah. Oh yeah, sure. Like that would have been a good trade to be like, let's just take one off and then see what the other one does. And if the other one ends up scratching, then that's fine. Yeah. I mean, it could do that, like because it really is just the flow is really just not doing what I expected. The flow over here, look at the ES, right? So we said, well, that looks like that could become a liquidity hole. Yeah. You ended up getting the right to there. You ended up getting the distribution just above that 3,900. So it played out exactly what we expected. They'll push below that price, but in the end, they end up messing around with that a lot. It could mean that we push up higher from here, but that remains unseen. I think that we have a reason to think that that could happen, though, right? Yeah. It is kind of like threatening to go back up to the high, isn't it? Is a level 2 difficult? Wait, what are your levels? Explain to me, Nasdaq Killer, what are the different levels of difficulty for a day? How would you pin them? I'm really interested now. I think you might be onto something. If we could have a scoring system for how difficult a day is to trade, I actually really like that idea. It might be a good spot to cherry pick, ZN. What do you mean by that? I suppose it might. So there is something kind of interesting going on here, which is that this is probably a spot where we might chill here, chill here for a little bit, and it might trade back and forth. So, um, but like the overall volume is really weak, so I think it's kind of sticky. Oh, all the deltas pointing north. Yeah, I don't know. It's the delta in the 10-year is really interesting, right? You could come back to the chart. So if you look at the 10-year here, in the 10-year, okay, we got that little bit of up. We got that little bit of up in the 30 and the 5, not quite. But look at the downside. Like it was flat all through here and they were selling it. And then when it went down, it was really more bids giving way than it was, right? So the thing that I had noticed that we were in a situation where the bids should be a little soft, that ended up being a really important factor behind that trade. If it wasn't for that, I don't think the trade would have worked out. Like if we had been moving down going into the news, right? And then the news ended up being good and so that was a reason to sell it, right? I don't think you would have gotten paid on that one, right? Because those bids would have been too strong and we just didn't get enough market volume off of it. Of course, it would depend on why we had been selling going into it, right? Because if we'd been selling because of a non-fundamental seller, then maybe that would have accelerated it. But it was a difficult read. It was a difficult decision, but I think I made the right choice, right? If I had not taken it when I did, I'd be scratching it right now. I forget, what was this study about? Oh, the endogenous dynamics of intraday liquidity. That's right. That stupid dog. I don't know what to do about him barking. Can you hear him in the background? Worse than the stupid bird. Let him outside. Good grief. All right. So I go and I put him in his kennel. The reason he's freaking out is because the guys for the grass came. So he's freaking out. I put him in the cage and she's like, oh yeah, that'll shut him up. Yeah, because now he's going. Arr, 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 arr. It sounds exactly like that too with the voice and everything. Makes it sound like he's being strangled or something. Anyways, but it's like, what am I supposed to do? Nothing else to do. Level 1 was Friday, Tuesday and Monday and Wednesday. Friday price was only going up. Thursday is a level 3, ranged all day. No one can make it there. Today was in between range and slow movement down. So are you saying that level 1 means it's really easy and level 3 is it's really hard? I don't know. Well, like one of the things though, NASDAQ killer, is that it depends on how you trade, right? Because if you're getting a ranging day, what you do in a range like that is you'll look for the point where it's like they're gonna break out, let them break out, let the liquidity develop and everything, and then reverse it, and rely on the mean reverting paper behavior coming back in, right? Is but again, it all depends on, like, you have to be able to predict the orders. I think that this one. Why don't you have the UB up, Reggie? That's a good question, actually. I think that there can be useful information in the UB, but I only have so much room on my screen. So I don't think that I'm getting enough informational content out of UB to really justify taking up the space on my screen. That's all. I think that if you have the room, you should absolutely put it up. If I didn't want the numbers on the 10-year to be large so that it was easier for people watching this on replay to read the order flow and see it on the screen, I would probably use the default font, and everything would be a lot smaller, and I would be able to fit probably 2 or 3 more DOMs on here, or maybe replace it with this Vista chart thing, right? But yeah, is what it is. It's so cruel to cage your puppy. Okay. You know what? The mistake that I made was not making sure that I put him in the cage at least 2 hours every day. Because now he tries to whine his way out of it every time we stick him in there. The amount of ticks it moves is very tempting. Sometimes with the UB has gotten me in trouble because of that. Yeah, it's true. It really is true. Man, look, the treasuries are going to push a new high here, man. See, if we were that did not result in a reversal of the order flow. There is somebody, they got to buy these things, and they're not done. How much more could they buy though? That reduction in volume probably gave them at least 5,000 contracts. So I suppose we probably could try trading it the other direction. We probably could try a short at 3.155. Order's gonna order. I hear you. I feel ya. Oh, that's great, man. Oh man. That's right. Trader's gonna trade and order's gonna order. Hopefully the traders ain't on the wrong side of the orders. Mm. If you were to build something for someone, how do you protect them, Seth, if they don't want it advertised at all? Well, so if I make something for someone, I program it, I give it to them, and then I never say another thing to another soul again about it. This is usually how it works out. I have to say, though, it's been a really long time since somebody's asked me to make something that I was like, oh, that's actually a really interesting idea. I want to do. Yeah, no. It's almost always like, no, it's probably not going to work. It's just because usually what people want me to build are technical analysis, right? It's like, oh, they still believe in technical analysis, but they don't know how to make it themselves. Because that's the thing, is if you knew how to do it yourself, probably would have given up on technical analysis by now. Just add-ons, math things. Sure. I really want to get more. I mean, there are some like more advanced mathematical concepts that seem to be missing from NinjaTrader. It's like the number of indicators out there that would require like a serious math framework to really do effectively, like, is crazy. And I do kind of suspect that people just don't do them because they don't want to go through the effort of attaching a framework in there like that. But you know, anything that involves the matrix math and stuff. Hmm. How do I say this? What I want to say to him here? See what he says. I really, this guy, Charles Albert Lahale, I don't know how you say his last name, but I've only had a few interactions with him, but he seems like a really good guy. Really like him. The thing that continually impresses me about the finance community overall, people act like, they don't like people in finance because it's like it's closed off to them. It's this dark, shadowy organization that there's a club and you're not in it, sort of a thing. but what I have found over and over and over and over again is that people that are involved in finance, and specifically people that are involved in any kind of trading, they love to share this stuff, and they love to, they understand the value of mentorship and collaborating and working with people. That's why we kind of base the channel more on that kind of an approach rather than get as many viewers as possible, sort of a thing, right? It's just that when you work at the big company, because of the sensitivities around what they do and just the social media environment, they don't want employees coming out and making their company look bad. So they're very limited in what they can do, but they are still like way totally open to talking and interacting with you, if you can find them. And it's the same. And the people in the retail trading world, a lot of them are like open books. You can ask, like John Grady. I'm telling you what, man. John Grady answers every freaking email. Who knows? I'm sure he gets a ton of emails. I get a ton of emails, okay? But I bet you he gets like 20 times more than I do. He answers every single one of them every time with good, like he's a good resource to just ask questions, right? And all of these guys are like that. All of these guys. You ask Futures Trader 71 a question on Twitter, he'll answer. That's how he became famous. This is just from answering people's questions on Twitter. It's there's a lot of resources available to you, and a lot of times we don't take advantage of them. Well, they did start to move up there quite a bit, but they came back. We are getting a little bit of steepening in the end, in fact. It's kind of interesting because I thought at first that they were going to flatten, and the flattener did kind of help us, and then we got out. I don't know. Maybe the market maker was just being nice to me today. Maybe they're like, well, we got to buy a bit, but Seth is right. Like, that is a pretty significant data point. Let's just pull our bids a little bit, let him get one. Hopefully he's smart and takes what he can get, and it would all work out. It must be. That's sure what it feels like to me right now. It's like, because somebody did want to buy it. I don't know though. The drop had pretty good volume behind it too. So maybe we just have a two-way market. Maybe we just have a two-way market. I mean, it is Monday. Well, let's see here. We got about 10 minutes or so before I probably should get going. Let's, something that I haven't done is made sure that I've got a good insight into the news that we get the rest of this week, right? So we are having G7 meetings right now. That can always result in market moving geopolitical news. So far, I haven't seen anything too significant coming out of it, but you just be aware that that's happening, and that does kind of color people's sentiment, and it kind of colors the news because that's kind of one of the top things that they're going to be looking at, right? Let's see here. Tomorrow we get good trades balance, wholesale inventories. Wholesale inventories will be a number that we want to watch. If that number is like 2.3, that's a number that they usually get pretty good. But if there was an outlier in there, might be an interesting move off of it. I don't know. HPI. CB, consumer confidence. Okay. So that's from the Consumer Conference Board. So they do have, oh no, do they have an inflation? I don't know if they do. It's not listed on here at least. Richmond Manufacturing Index. So those manufacturing index numbers have been important as of late. OPEC on Wednesday. Ooh, and final GDP quarter over quarter. That would be interesting on Wednesday if the final GDP ends up being revised significantly. Like if it was revised to positive, that might change a lot of people's view of the markets. Oh, Chairman Powell is speaking on Wednesday, due to participate in a panel discussion titled Policy Panel at the European Central Bank Forum on Central Banking in Portugal. Okay, that's a place where I think that you could see a lot of headlines. Because it won't just be him speaking, it'll be all of the central bank people, right? And in a context where they're going to be willing to talk about the mistakes that they made and where they're looking going forward. Core PCE price index is on Thursday, along with unemployment claims and personal income. Very curious. We don't get the jobs number on Friday because it's the first, I guess. Well, we do get personal income and personal spending and Chicago PMI. So we got a good slate of data. ISM manufacturing on July 1st. So then does that mean that next week is non-farms? Yep. I mean, I guess that's good. That will kind of even things out. You gotta remember also, man, the rebalancing this week is going to be intense because you got a 3-day weekend too. So there's going to be a lot more rebalancing ahead of the weekend as well. And it all kind of comes to a head like the first is on the Friday. So yeah, and it's a quarter end. So we're probably likely to have some really strong rebalancing flows. Dollar's getting killed here. What's with that? Well, I don't know. I feel like the dollar is a little bit too high anyways, so. John Philippe, what's he saying on LinkedIn? Among the most fascinating stylized facts of financial price series lies their lack of symmetry under time reversal. Although it may seem obvious that past and future should play a different role in financial markets, most stochastic volatility models fail to capture this property. For example, the original version of the multifractal random walk model, together with its, quote, rough volatility generalizations, are time reversal symmetric. The simplest time reversal asymmetry is the so-called leverage effect, i.e. the fact that past price drops lead to an increase in future volatility, but not vice versa. This is fairly easy to account for in SVU models, but note that this effect simultaneously violates time reversal and return reversal symmetry. The more subtle are effects that are time reversal asymmetric but unaffected by the sign of returns. One is the volatility profile around unanticipated news. Volatility is flat before the news, then jumps and slowly decays after the news. Okay, yeah. Another is even more subtle. Past price trends, both up and down, induce more future volatility, but not the other way around. This is the Zumbach effect. I've never heard of that before. I want to read about that. That's going to be some of my research today. Zumbach effect. The intuition is that the unexplained local trends make liquidity providers wary that something they don't know is going on. They take shelter, leading to increased spreads and increased volatility. This process can go haywire and generate purely endogenous price jumps. This is the story of another process. It's totally true. It totally happens. We talk about that all the time, right? This is like, well, I don't know what's going on. I don't really want to trade. And then you kind of see the market makers start to do the same thing. Yeah, totally happens. Hawk's process, providing natural framework to capture these feedback effects, but when calibrated to real data, all-time asymmetry somehow disappear. A way out which explicitly factors in the Zumbach effect was proposed a few years back by Blanc, Donnie, and myself. And he has a paper. Thank you, Philippe. In such a model, in fact, naturally generates power law tails absent in standard Hawk's processes. Very recently generalized the model to a multivariate setting in order to account for the cross effect of trends that can generate code jumps and many other interesting effects. Very good. Cool. Multivariate Hawk's processes. Quadratic Hawk's processes. Oh, there's so much good stuff, guys. I could just read articles all freaking day. I love this shit. It was good. I had like 3 articles I wanted to read over the weekend. I didn't do it, but I did do some reading on machine learning ops. So we got that, which is good, which is nice. Okay, I just came in and watched this video where Nancy Pelosi elbows the little girl out of the way, and she comes back. Look at this. It is funny. Oh, I need my photo op. The little kid's like, okay, no, I'm standing right here, hon. Oh, that's freaking great. It's freaking great. I bet you this becomes a great meme. This could be a great meme. Especially since she's Hispanic, you could make all sorts of memes about the Democrats, how the Democrat Party treats Hispanics, which I think is very disrespectful to them. They don't really care about that. It just, man, I tell you, like the thing I see over and over, you want to know why the Democrat Party is having such a hard time? I'll end on a political note. You want to know why the Democrat Party is having such a hard time in politics these days? It's because it's so blatantly obvious that they don't actually care about their constituents. All they care about is being elected. I mean, I'm not saying that Republicans aren't the same way. I mean, all politicians are like this to some extent, but it's just so glaringly obvious with the Democrats right now. I think that's really what's hurting them at the voting booth right now. I thought with the, I don't want to get too much into the abortion thing, but I thought that there would be a lot of unity with the Democrats after that. But no, they were pissed. They were pissed at their, when I looked at the Democrats' faces, they were mad at the Democrats. They were like, why, you knew this was coming. You didn't do anything. Yeah. It's because of inflation. Well, yeah, that could be that, I think that there's very much something to the fact that everybody's kind of realizing that there is inflation that the experts didn't predict, and that the money printing was at least one factor that contributed to the inflation, and it was all the Democrats, and they're full of crap, Yeah. This November is going to be an interesting election, guys. I got to tell you, 2024 is going to be interesting too. I hope Donald Trump doesn't run. What'd be nice is if neither Donald Trump or Joe Biden were running in the general election. That I think would be nice. I don't know. Probably asking for too much. Guys, I'm going to get going. We're going to put on slow week start. Nah, I don't know. Week start heading into huge quarterly rebalancing. Okay. Guys, I will see you tomorrow. Hopefully my voice is better. In the meantime, stay profitable, or at the very least, don't blow it all.